Hello everybody and welcome to another amazing video of DIY investing. The ETF is now live and trading. We've seen over $1.74 billion of trading volume in just the first hour of launch. We're going to talk a little bit about what this means in the short term as well as the long term, mapping out the entire cycle, going over our 4-year cycle, as well as going into profit-taking strategies going into the end of this bull run. I think that now is the best time that we can look to strategize, analyzing what is going to be playing out inside of this cycle, because now that the ETF is approved, institutions are going to be flocking in by the thousands. I firmly believe that this could be the very biggest cycle that we have ever been a part of in crypto history. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, here we are to start off today's video, and we are going to be mapping out the long term of Bitcoin as well as talking a little bit about the shorter time frames, because I think it's important that we're talking about both. With the launch of the ETF, we had a pretty ugly rejection candle that took place at the market open, and so we're going to be watching to see how the market follows through with that. Are we going to see a little bit more downside? If we do reject from this level up here, overall I'd expect us to come back down to about $43,200, make some type of move like this. Overall, when I'm looking at the higher time frames going out to the daily, I look at this and, we can't really say one way or another what the direction is going to take. This to me just looks like kind of consolidation. Even though this is a bearish pin hammer candle and it is a rejection candlestick pattern, we have to keep in mind that with us just clearing this range high, this is still some type of consolidation. We haven't really had any sort of big confirmation one way or another. If we close at this pin hammer candle and then the market starts to open bearish, I would expect that we would probably end up falling back inside of this range, which if we fall back inside of this range, the potential becomes that this is deviation, where we maybe make a much deeper drop inside of this consolidation. Because when we're zooming out here, guys, my main target ever since we broke 25K has been $48,500. And now we're at that level. In fact, we've already hit that level. So my main target has been reached that I was watching for. It's just that when we're looking at maybe like the daily time frame, this looks a little bit more like it's going to need one more peak before it's over. So when I'm looking at the shorter time frames, I still see the potential of this going into another high. We've talked a little bit about what happens if maybe we come all the way up to about $52,000, just clear this range, considering almost everybody's kind of been looking at this as the take profit or the big short level. And generally speaking, we end up seeing the market, make one more peak above, kind of flush out all of those people that were trying to short and are over leveraged in shorts, only for the market to kind of follow through with what they initially anticipated. It's just that we have one more kind of fake out. I really won't be surprised to see this play out inside of the market, but we don't know. With the ETF launching, we now have institutions that can trade this. We've already seen almost $2 billion in the first hour. I think that that's an early sign that there will be a lot of volatility going into this next cycle, which is why I think it's important that we analyze the long-term graph, looking at our 4-year cycle timeframes, because it's been a little while since I've updated you guys talking about those. Now, if we come out here and actually look at the long-term trend, this is where we're going to be able to, put it into the bigger picture of what is taking place and really map out the 4-year cycle trend. Now, the way that we're going to be looking at the 4-year cycles is from taking place in 2015, and then we're going to be analyzing the 2018 bottom, and we're going to be analyzing the most recent bear market bottom we had. Now, you guys might be asking, why am I not analyzing this bottom over here? And the reason is because Bitcoin only had $2 million total market cap, and I just don't think that there was enough adoption to really, consider that a true 4-year cycle. The distance from here to here, instead of it being 4 years, it was 3.2 years. So, it was still really close to being the same, but for the sake of what we're going to be talking about, I just think it's a little bit more fitting that we mainly stick to right here. So let's zoom in here. Let's talk a little bit about what we're seeing, because I want you guys to be able to put into perspective how the cycle will play out and how it will factor in with the 4-year cycles, because a lot of people are wanting this market to break out and go into a new all-time high. That's the talk that I see on Twitter. Everybody's talking about, wow, Bitcoin's going to make a super cycle. It's going into a new all-time high right here. And I don't want that to happen. Personally, I think that if Bitcoin were to front run and go into a new all-time high quicker than any of the prior cycles, it would would show that we are going to be leading towards a blow off top type phase. And it would be a shortened cycle. The profits probably wouldn't be as big, and it could lead to a multi-year bear market. And I'm talking multi-year bear market, not a one-year bear market like our prior cycles have been. You know, this at the end of the day has only been 1 year down, 3 years up. That's how every single one of our cycles have been playing out over the last 10 years. So if for us to actually front run the cycle, I don't think that that's a good thing in the slightest. And we're going to talk a little bit about as to why that is. So when we're analyzing cycles, we have to look from the cycle low to the cycle low. We always measure the peak low to the peak low because the distance in between is giving us the full cycle. The cycle starts at the very bottom of the downtrend, right? Because that's where the new uptrend has to begin. And then the ending of the uptrend starts at the very bottom of the next bear market, right? Because that's obviously where the next cycle has to start if we start a new uptrend. So that's the way that we would measure a cycle, is peak low to peak low. Now, inside of Bitcoin cycles, what we've seen is about 3 years in a bull market and 1 year in a bear market. If we look at each one of these bear markets, this one was the longest, being 413 days, but pretty close to a year. This one was almost exactly a year, being a day short. And then once again, this most recent bear market was exactly the same. So all of our bear markets have been about this exact same amount of time, going over the last 10 years. And when we're looking at peak low of the bear market to the top of the cycle, you're looking at about 1,000 days approximately, give or take, you know, some. This one was about the same. Both of these cycles were 1,064 days. And that's why I think that when we're looking at this current cycle, it's important that we're understanding our prior cycles, because for us to already start going into a new all-time high, it would happen much quicker than any of the prior cycles. Now, when we're talking about 4-year cycles, remember, peak low to peak low should equal 4 years. So how many days is 4 years? 1,450. So as you guys can see, we're just about a month shy from being exactly 4 years from peak low to peak low. So we have a 3-year bull market, a 1-year bear market, and then the distance from cycle low to cycle low equals 4 years. And that's how you would basically analyze a 4-year cycle. And we can see that the same thing happened here. If we go from peak low of our 2018 bear market, and we go all the way over to our peak low of our most recent bear market, being the FTX collapse, you're going to see the exact same amount of time from the last one. And that's why we get the 4-year cycle theory. So when we're talking about this, both of these cycles were exactly the same. Now, what I want you guys to, put into perspective was the amount of time it took from the all-time high to the point of us actually breaking out and going into a brand new all-time high. If we're looking at the 2015 to 2017 cycle, you're pretty much looking at a little over 1,200 days, about 1,250 days from the cycle high to the point of us making a new all-time high. And if we're coming over here to the last cycle, from the peak all-time high to the point of us making a new all-time high, you're looking at about 1,100 days. So it was a little bit shorter, but when we're talking about our current cycle, from our last cycle high to where we're at today, we're sitting at, just under 800 days. So we're significantly quicker than even our most recent cycle, which was faster than the one before it. And that's kind of another reason why I'm saying that if Bitcoin was to go into a brand new all-time high, it would be the fastest amount of time that it's ever taken to do so from the last cycle high. So this one was 1,250 days. This one was 1,100. For this one to start doing it at around 800 days, in my opinion, it would be a bad thing. And we're going to get into a little bit more detail as to why. Now, when we're talking about cycles, the way that we understand whether the likelihood scenario of a 4-year cycle playing out again has everything to do with where the cycle top takes place at. So remember, if we're analyzing from peak low of the bear market to peak low of the bear market, that gives us 4 years. Now, another point that we can draw is the halfway point. If we look at the middle point between cycle low to cycle low, that's another very important point to be factoring when we're looking at the cycles, because this is going to give us the idea or understanding whether we're going to have another 4-year cycle later to come, or whether this is going to be, the last of the 4-year cycles. So half of 1,428 is going to be 714. So 714 is going to be right here. We're going to draw another point. We're going to make this one yellow, and we're going to do this for every single cycle. So once again, this cycle was also 1,428 days. So we're going to go 714, and then we're going to draw another data point. We're going to make this one yellow. And then we're going to talk a little bit about why I'm drawing these. So remember, guys, from the peak low to the peak low is 4 years. But if we analyze from the middle point of the peak low to the peak low, this gives us what's called the midpoint of the cycle. Now, whatever side that the cycle tops on from this middle point, notice how this is the right side of this middle point. Whatever side that the market tops on, it's either going to be called a right translated cycle or a left translated cycle. So because our market cycle peaked on the right side of this mid-range point, this is what was called a right translation in a 4-year cycle. So in a right translation, whenever we get one of those, it basically means that the next scenario for our coming cycle is most likely going to continue to follow another 4-year cycle. It more or less tells us that we're going to continue to follow the same trend. So once again, if we remove this drawing tool and we come over here to our most recent cycle that we just went through, remember, it's 1,428 days all the way through, and this is our middle point. Notice where our cycle topped at. Even if you draw 65K at the cycle top, what side of the mid-range point did it top at? Well, obviously it was the right side. Both of these topped on the right side of the mid-range. So this was also a right translated cycle. Inside of a right translation, that basically just means that the likelihood scenario is that the next cycle follows another 4-year cycle. And so when we bottomed at the end of the year, exactly 4 years from our last 4-year cycle, and because we topped at the right side of the midpoint, it basically told me that most likely we're going to have another 4-year cycle. However, guys, we have to remember that we have to be willing to adjust. We have to be willing to adapt. All we've been talking about is more or less hindsight, looking at the prior cycles. What we haven't done is tried to factor in how our current cycle is actually going to be playing out, right? Because these are all prior bear markets. All we're looking at right now is this. This is our new cycle, and this is what we need to be paying attention for today. So remember, if this is the peak low, 1,450 days is going to be 4 years. So 1,450 days is going to be taking us to October of 2026, basically the end of the year 2026. That is where our projected bear market bottom is supposed to be. So inside of all of our prior cycles, we see 3 years up and 1 year down. So what that basically means is if we're going to be looking at half of 1,450 to get us a middle point, we're going to be looking at 725. So we're going to basically just draw it right here. We're going to make this one yellow, and this one's going to give us our full cycle. So remember, guys, this is the timeline for this current cycle as well as our following bull run from here. Now, guys, this is where we're going to be talking a little bit about why we don't want to see Bitcoin go into a new all-time high so fast. Considering if we're looking at our prior cycles, remember, Bitcoin always topped on the right side of this mid-range point. For Bitcoin to be breaking out and going into a new all-time high like this, before we're ever even at this mid-range point, in my opinion, we're going to be looking at a left translated cycle, where this ends up peaking, our cycle top ends up peaking on the left side of the mid-range, and it ends up being a shortened cycle. Instead of us having a normal 3 years up, 1 year down, we might end up peaking this year, sometime 2024, and then that leads us into a 1.5 to 2 year type of bear market. It would be the longest bear market that we've ever seen, because remember, all of our prior bear markets have just been a year long. 364 days, 364 days. This one was 420 or something like that. So it was a little bit longer. But once again, guys, all of our prior cycles also topped on the right side of this mid-range. This one did right here. And this cycle, for us to be going into a brand new all-time high that fast, in my opinion, it would point to the conclusion of us actually having an early cycle top. We don't want that to happen. What I want to see happen for Bitcoin, I would like to see Bitcoin maybe come up to 52K, reject right there, and then come back down to this main trend line that we've kind of been building to begin the cycle. I would like to see us come back down, consolidate on that level, get us closer towards the point of our halving, maybe even closer towards Q3 and Q4 of 2024 before we do start that move into new all-time highs. We want to see that this market peaks on the right side of the mid-range point, because if that happens, it basically gives us a likelihood scenario that we're going to continue to follow the 4-year cycle trend. But for the Bitcoin cycle to end up peaking prematurely of this trend, for us to do, something like this, where we end up peaking before the mid-range point, that would show that this ends up being more of a blow-off top type of scenario. And I would expect that our entire bull market for Bitcoin would be nearing a multi-year type of correction, something we just haven't seen up to this point. All of our bear markets have been very short-lived. The longest bear market was the one in 2014, being like a little over 400 days. But all of our prior bear markets have lasted about a year. For us to end up front-running this cycle, I just think it would be a bad thing. We don't want to see that long-term. We do want to see Bitcoin Bitcoin correct in here. So for the people that have been, encouraged by the ETF news, by all of the talk about us having this super cycle, Bitcoin making this absolutely monster new bull run, front running prior cycles, going into a new all-time high much quicker, those are all bad things in my opinion. The ETF is a good thing. It's just news. It's a way for institutions to come into the market. But, the ETF could be a blow off top type of a news event, considering if we go and look at the price of gold, but if we look at the all-time graph of gold, right here was the ETF. This is when the ETF got passed for gold. And we can obviously see that shortly after that, the price of gold just absolutely went into this massive blow off top. Now, obviously, we're at a new all-time high. It's looking like it's going to continue to go up. The point that I'm trying to make here is once the ETF got approved, this thing just pretty much went straight into a new all-time high. And if Bitcoin were to do the similar sort of thing, it would just basically mean that Bitcoin would be front-running prior cycles. We don't want to see that. We want to be seeing slow, steady consolidation as Bitcoin works its way up inside of this uptrend in the same way all of our prior cycles have kind of played out. I just find it more likely that we're going to make more long-term profit by simply, buying the dips on these things, expecting Bitcoin to come back down. If Bitcoin even peaks up a little bit higher, we just want to see Bitcoin come back down to this trend line. That's what I want to see. Give everybody a good opportunity to get back in, kind of shake out all of the over-leveraged people, all of the weak hands that were only getting involved around the ETF news, only for the market to kind of start that next leg up. This would be a lot more consistent with our prior cycles. Even inside of our last cycle, as volatile as it was, it still took a good amount of time of accumulation before we ever went into a new all-time high. So that's kind of my thoughts going into this cycle. I just want you guys to be aware. We don't want to see this front running. We want to see this being slow, consistent, methodical, like it has in prior cycles, because that's really what's going to give us the best idea and the most likelihood scenario that we're going to continue to follow these 4-year cycles. I want to make money off these 4-year cycles forever. I would love it for it to just keep happening forever. I don't think that that will happen. I would love to see at least one more 4-year cycle play out in this bull run, because we would literally have another 2 years to just make consistent profit on the way up. For this to be the blow off top type year, it would be shorter by a year. That's an entire year less of a bull market to make profit on, an entire year less to chase narratives. And I just can't overstate how important it is that Bitcoin doesn't do that. So even though we're excited, even though we're all bullish, just remember, guys, that it's not the best thing in the world to see Bitcoin front run. It's actually better if it takes its time. So this is my breakdown. If you guys found value, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these updates. If you guys want to join the Discord server, download my free ebook. If you guys want to join the Discord server and see how I'm investing over this next cycle, lots of our altcoins have been popping off like crazy. Layer 2s are blowing up. You guys know that we've been talking a lot about those for over a year now. And now that we're starting to see all this money taking off, I think that this is only the beginning. So if you guys do want to see how I'm positioned, what altcoins I'm buying, expecting those 100x type gains, links are in the description to go ahead and sign up on my website. From my website, you're actually going to get access to a private Discord server. And on that private Discord server is where I post every single one of my trades, anything I'm doing with my money long term, even if I take profits on crypto and jump into stocks and commodities, anything like that, I post it in the group, and you guys are going to have lifetime access once you're in. So if you guys do want to check it out, once again, links are in the description. Go ahead and sign up on my website. And with that being said, I'll catch you guys in the next one. As always, peace out.